So welcome back to the Edgewonk podcast. We are here today with Akil Stokes. Very happy to have you on. Thank you for taking the time. It's been a few years since we talked the last time, so thank you for spending another 45, 60 minutes with us today.
Yeah, I appreciate it, guys. Pleasure to be here. Always love talking to you and always love talking trading in the markets, as you guys know.
Cool. And Moritz as well with us here today. Hello, Moritz.
Yes, hello.
So I want to go right into the topics. There's a lot of things that I've written down that I would like to pick your brain on. Let's start with what is your trading style and how would you describe your trading strategy?
So I'm a price action trader. I guess if I had to describe it, kind of a classical price action trader. So looking at classic chart patterns, I do some advanced patterns as well, but mainly my trading strategy revolves around support and resistance, so structure. So for me, structure is the most important clue in the market. It tells you a lot about where price action came from, where price is likely to go, which levels the markets are interested in, which levels the markets may not be interested in. So whether it's trend continuation, going with the trend, whether it's counter trend, playing reversals or something like that, it all revolves around structure. And then kind of within that, there are different little patterns, flags, head and shoulders, double tops, double bottoms, a lot of the classic stuff.
All right. Yeah, I remember you used to trade more like a Fibonacci and those Gartley and those symmetry patterns, right? So there was a shift going on.
Yeah, so I still trade those. For me, those were the easiest, easy in quotes, I guess, the easiest to pick up and start trading, because when I was taught them, it was something that was very rules based. And as a newer trader, I was all over the place. I didn't like rules. I didn't follow rules. I kind of just wanted to come into the market and, go off like a feel, like, oh, I think it's going to do this. I think it's going to do that. And I got into a lot of trouble. So I had to take, I don't know how many steps back and, do something that was very straightforward, black and white, or as black and white as possible. And they're still a staple of my trading strategy. They're kind of slow, boring, methodical at this point, but they're consistent, which I love. But something that I have done is go back to the stuff that I really enjoyed, which was like actually reading and analyzing a price chart. So it was a pretty cool transition as I got better with one thing, I was able to do that kind of just on autopilot, and it opened up more time and energy to focus on kind of the next evolution of my trading, which was pretty cool.
Yeah, that sounds interesting. I definitely want to get more into this, but how did you, in the beginning, when you were just new to trading, how did you choose your strategy? Did you go through multiple strategies, and how did you then settle on this one that you started with and you're still using?
Well, I was all over the place. It's a little bit shameful, but I guess most of us are like this. When I first started trading, I was looking for the thing that would make me money the quickest. Even my transition from the stock market to the Forex market was because someone told me that the Forex market is bigger, it offers more opportunity, you can start with less money, it's higher leveraged, and everything in my brain was like, I can take a little bit of money and I can make a lot of money. Now, I wasn't kind of, I wasn't as blinded as those traders that think they're going to become like millionaires in one day, but I thought success would be pretty simple. And I knew nothing about technical analysis going into Forex. So when I first started, I would just go around the internet, watching videos, reading books, and like picking up strategy after strategy that everyone made seem good. And I would try it and failed and move on to the next one, then try it and failed and move on to the next one. And there was pretty much a lot of trial and error. I played around with a few mechanical strategies, which at the time I just wasn't mature enough to trade, meaning that I would trade them because they worked, but psychologically I wasn't good enough to kind of consistently trade them. So every time they would lose, I would be like, oh, the strategy sucks, and I'd throw it away. So going through a long journey of that, eventually I got to something that was price action related, which is something I wanted, but didn't require, I guess, the discretionary skill, meaning me being able to kind of analyze and judge. I needed something more strict, and harmonic patterns, Fibonacci based patterns were very, very strict. It was pretty much black or white for the most part. And that was something that kind of kept me grounded and kept me straight and allowed me to actually, follow my rules without breaking them. So that's how I got started in them. And obviously I fell in love with them as well.
Well,
Would
yeah.
you say that these patterns, because they took out the discretion from your game, it was easier for you to as a beginner? And also because you've trained so many people now over the years, would you say this is the easiest way to go for beginners, like with a strategy that has way less discretion, and then as they get better, introduce more discretion into the trading?
Yeah, I agree with 100%. I think as a newer trader, we need to kind of be as babied as possible, meaning we need as little freedom as we can get. And so I'm a big believer in trading intuition. I'm also a big believer that most traders that believe they have intuition at the beginning stages don't really have them. So like intuition being like that feel, that sense, like I see that and like I know it's going to go short, where a lot of new traders kind of like see that and they're just, recklessly gambling. I think a lot of experienced traders actually have that. And the reason that we have that is because we've seen probably millions of different patterns at this point in the market over and over again. And even if we can't quite put our finger on it, we know it's like, hey, I know when the market does that, that's a sign of this. As a newer trader, we don't have that yet. We don't have that experience in the market where we've got all those repetitions of seeing the same things over and over again. So we need to kind of be on a very straight line of like, look at this, look at that, only this, only that, whether it's price action. I think mechanical systems are good for newer traders because they're as black and white and possible. They take the discretion and subjectivity out of it. But I think as newer traders, we need to start with that to kind of get our feet wet. And then as we gain experience in the market, we can start kind of, I guess, earning our discretion, earning our intuition, and we can start kind of loosening up the rules on how we trade.
Makes sense, yeah.
How do you help traders when they come to you? Because you've been working with traders for many, many years.
Yeah.
How do you help them to ditch a trading strategy when they hit their first 3, 4, 5 losing trades, or maybe just 2 losing trades in a row? How do you help them stay on track? Are there any techniques or tips, or how do you help them?
Well, it all starts with belief. And, obviously you guys are big into back testing, you're big into acquiring data. And I always tell them that that data is purposeful. Like if you've spent time back testing, if you spent time acquiring data, if you spent time proving that your system or strategy works and you have the numbers, trust the numbers, right? Your numbers will show you that over time, this is profitable. It'll show you what your edge is. It'll show you biggest winning streaks, biggest losing streaks, max drawdowns, all of that stuff. And when you get into a little bit of a rut where you're maybe on a losing streak and you're starting to leak confidence, I always say refer to the data, right? Click it open, look at it, and ask yourself, hey, I'm on a 5 trade losing streak right now. And you go through your data, find what is the biggest losing streak. Oh, this system or strategy routinely takes 7 trade losing streaks. So you're still in kind of a normal area. You're not in an unnatural drawdown. And that should give you confidence that, hey, although it sucks at the time that I'm going through this is normal. This is supposed to happen. And my numbers have shown me that if I can fight through these times, that eventually I'll get back on the profitable path. So I think having that belief in yourself is key. When you have experience in the market, when you've been doing it for years and years and years, you kind of, you know it within yourself because you're like, I've been through 5 trade losing streaks before. This is going to be fine. But as a newer trader, you don't have that experience of working through them. So that first one or those first couple ones are extremely hard. And the best thing that we can do is look at the data, look at the work we put in, and use that to give us some confidence. That and surrounding yourself with other traders. I can't tell you how many times I've been in a drawdown and I've reached out to another trader that I've known for a while, and they're like, yeah, trading sucks for me right now too. And I'm like, yes, like we both suck together. And it's just sometimes, especially with everyone talking about their P&L on the internet and stuff like that, it seems like you're the only one that's in a drawdown or only one that's kind of going through a bad period. And having someone else that's kind of in the suck with you, misery loves company. It kind of makes it feel a little bit better where it's like, hey, I'm not alone. I'm going through this with someone else as well.
Yeah, totally. It gives you also a little bit more of the realistic perspective on what trading is. It is compared to what you see on social media. When we talk about data, did you tweak your system over the years? Like, meaning, did you play around with different take profit levels, reward risk ratios, trade management, and how did you go about this?
Yeah, so data is everything. And I think that, we talk about the back testing process before you start trading. You're going through and you're getting historical data to prove that your system is correct and make tweaks and stuff there. It's very important that we continue to track data. And we should be doing that anyway with our live journals and whatnot to see if we're profitable. But the markets change over time. And as traders, we change as well. And having that data tracked over time can allow you to make adjustments. I would say the biggest change that I made in my trading over the years has been two things. One, it was becoming a little bit more aggressive with my entries, and that was because of what I saw in the market. I saw that, hey, I'm missing a lot of trades. Like a lot of trades would come to certain levels, and I'm like, okay, I'm going to get involved. I'm going to get involved. I'm going to get involved. I just need this, and it would never come. But I would see an alternative reason. I'd be like, man, like if I would have done that, I could have gotten to the trade. You write it down, stash it away for later, write it down, stash it away for later. And then in the future, you start looking at it and you're like, hey, maybe this is a way I can enter a trade and it allows me to have more opportunities or get into a move quicker. And we can make that adjustment to our strategy. Another thing that I did, again, without really changing the bigger philosophy of how I trade, is just I got better with stops and targets. I got better with understanding like how big or how small of a stop loss I need. Like, can I take a smaller stop loss and still have the same pretty much win percentage, meaning that I can lose less per trade and it doesn't really keep me out of winning trades? Yes, check. Can I take a little bit more profit, right? Do I get better with technical analysis and understanding profit levels? And can I get a little bit more out of each win? And it's amazing if you just take, if your, let's say your win percentage remains the same, if you can just kind of minimize your stop loss by a little bit or your average loss by a little bit, and increase your average profit by a little bit, you're working it on both ends, and that does wonders for your return on investment at the end of the month, quarter, year, whatever it is that you're tracking.
Right. Yeah, it's going to boost your reward to risk ratio a lot. But you need to do it with data. As you said, I see it a lot in the journals that I review, that traders do a lot on guesswork and they don't listen to the data. So that's really important that you do the things that you have a feeling about, the intuition that you talked about, which probably a lot of traders mistake for just gambling, as you said, that you back it up by data. Otherwise, there's no way of verifying if it actually works. When you because we talked in the beginning a little bit before we started the podcast, you made a transition from a more, because last time we talked, you were more in the short-term trading. Now you transitioned a little bit more. How was the transition for you?
It was lovely. I'm not gonna lie. It was so I never intended to be a day trader. I wanted to be a swing trader, intraday trader, hourly and up. And I got into day trading when I started teaching because I'm working with students and we're going through live markets on, like in our live trading room. So it's like a lower time frame session. And day trading was fun, but the thing that I didn't like about it was that it was a big time commitment. Like I had to be locked in front of my charts from this time to this time every day. If there was a trade that was still on the board, I had to kind of cancel plans and be around my computer to manage it and make sure I'm rolling stops and trailing stops and stuff like that. And I started to ask myself, like, why did I get into trading in the first place? And yes, we all want to make lots of money. I'm not going to deny that, but really it was time freedom. Trading was cool because it allowed me to really have complete freedom around my day, meaning I can, I have to do certain things for trading. Yes, we have to do that, but we can travel at will. We can go to stuff. We don't have necessarily a set schedule like a normal 9 to 5. And that's what I love, especially with having kids, where I can go see soccer practices or go see recitals, or like I help out every year with field days at my kids' school because I can be there at 12 o'clock in the afternoon if I want to. And I kind of lost track of that and got sucked into being a slave to the charts. So I made the adjustment after COVID, because COVID was big, where all the kids were home and like my kids want to go play with me and I'm on my computer. I'm like, get away, I can't do it. And I kind of rethought about my values. So getting away from the lower time frames and sticking strictly to the higher time frames has been amazing because it opens up so much time. And I think as traders, if we understand what we're doing in the market, meaning we're following a plan, we have a strategy, we're not just recklessly gambling, I think it surprises a lot of traders how little time you actually need to spend on the chart. Like you don't need to be locked in for 10 hours a day at all. I can literally come in probably about a half an hour, see everything that's on my radar for today, set alerts or whatever I need to do, and then kind of go off and do whatever I want to do and just make sure I come back to check it if something is close. So it's been refreshing. It's been refreshing. I do miss it sometimes. I miss the action of day trading. You know, sometimes you guys know trading gets boring. You're waiting on something for like a week and you're like, come on, man, let's get on with this. But the benefits well outweigh that.
Would you say that, I mean, I 100% agree with you, especially now that I have a newborn as well. Time is everything to me right now. And it's insane how much time these little things eat up. I've always been a day trader traditionally, but also swing trading on the side. And right now, I'm also thinking about making some adjustments to my approach just to free up some time. Would you say there's more profit potential in day trading or versus swing trading? This is always the question that I get all the time from all the students and other people as well. Like which trading style makes the most money? What's your experience?
That's a good one. Man, I I don't know. I don't want to say one over the other because it's different. You have much more frequency in day trading, so a lot more opportunities. But a lot more opportunities doesn't always equal profit. A lot more opportunities, a lot more chances to make mistakes. If a trader isn't good, a lot more opportunity to take losing trades. Swing trading, the opportunities are less, but they're typically a little bit bigger. Your risk management, your position sizing approach is going to greatly impact that as well. So I want to say even it's there's not one over the other that can make more. I would tell you this: if you are a really good trader and probably day trading, just because if you're really, really good and you have more frequency, you can probably produce a little bit more day trading on a consistent basis. But ultimately, it all depends on the trader, all depends on their strategy, all depends on their position sizing strategy as well. But that's a good one. I like both. Do both. Make money on both ends. If that
Yeah,
answer
me
counts.
too, yeah. And I have I've done some research actually,
Mhm.
talked to some friends in prop firms as well and looked at their data, etc. And for them, interestingly enough, most of their successful traders, they are more on the 1 hour, 4 hour daily charts. Yeah, so day trading, while it can be really incredibly profitable, it produces a lot more losing traders than swing traders. And I think that is probably because of the commissions. Obviously, they impact your trading a lot, but also because the requirements, time requirements, you need to focus. The trades come way more often. You go easier on tilt, all that stuff. So
Mhm.
psychologically, it's probably a little bit harder, I would say. And because the margins or the edges in trading are so razor thin, that little bit harder can completely ruin your edge in the end, right? So yeah,
It's interesting you say that about the
yeah,
commissions. What was it? I think it was TradingView had a competition, I think over the winter, and they shared or over the winter, and they shared like I think their top five, and there's all different type of traders, and one of them was like, you could tell they were a day trader because everyone else had like maybe 20 trades taken or 30 trades taken within like a month, and there's one person that had like 100 or something crazy like that, and the commissions that were taken out were just like it was so much it sunk them where they probably should have been like the
yeah.
number two finisher and they were already fifth, but just because commissions, and that's something that, like I said, a lot of traders don't think about that, especially with a razor thin edge. Edges aren't super big; they're very small. So that's a really good point.
Do you think there can be a strategy misalignment between the strategy and the trader? I just reviewed a journal from a trader who sent it into us for Edgewonk, and he's trading a swing trading approach, but he has a lot of problems with FOMO. So he wrote in his notes for the trades often that he just wanted to get into a trade and he needed to trade. He had the feeling and then jumped onto trades. Do you think certain people are more aligned to a specific strategy, or Is there something else going on?
I 100% agree. And I got a personal story about that as well. But something I always tell the traders I work with is like, you want to align your strategy with your belief system and with your personality. So like, if you're not like, if you're going to be a day trader, right, you need to be locked in. You need to be able to take trade after trade after trade after trade, have a short memory, forget all that stuff. If that's not you, then you're probably going to struggle. If you don't have patience, probably going to be very hard to be a trader in general, but especially a swing trader on the 4 hour or 1 hour who's waiting hours, days, weeks for opportunities. But I told you guys earlier, I started with mechanical systems because I thought it was the quick plug and play. So I had a mentor that gave me a system. He said it was profitable. It was as simple as pretty much like following a red arrow and following a green arrow. When a green arrow came, you pushed the buy button. When a red arrow came, you pushed the sell button. And I'm like, okay, this is the quick fix. And it was a trend continuation strategy, which at the time I didn't know that I was more counter trend based. So I would sell on a red arrow, and the profit target would be like, let's say like a couple hundred pips away, like really, really far away, but you're supposed to kind of ride this trend. And time after time, it'd be like up 100 pips, then back up 50, then up 150, then back up to 50, like this, the normal roller coaster rides that trades take you on. And I found myself like always stopping myself out of trades early because I was getting afraid that my stop loss was going to get hit, or like taking profits early because I didn't trust it to get all the way down there, and like a million other things, but I kept sabotaging my edge. There were also signals that came where it would tell me to like buy, and I'd look at the chart and be like, no, I want to sell, because like my counter trend brain is saying we're at resistance, like sell, but the system is saying buy. And it was just this conflict of interest there. And that's what led to, again, me not trusting the system and sabotaging it. So I found out the hard way that, at the time, like I didn't, especially in the Forex market, I wasn't a big trend continuation believer. Nor does my personality fit with someone that can kind of sit in trades for a very long time and ride those waves of being yo-yoed from profit to loss, profit to loss. And that's something that made me go to advanced patterns, maybe go to a more counter trend trading style. So yeah, I certainly think that I think it's up to the trader, and we don't know what we're doing in the beginning, but as you're trading a strategy and as you're taking notes, like you mentioned, if you feel that you just can't trust it or you just don't believe it, it may be worth investigating another type of style that's more aligned with kind of your personality and your belief system. Because I think it's only a matter of time before you shoot yourself in the foot if you're trying to trade something that you don't actually trust.
So what I find off, because I was drawn to counter trend trading in the beginning, and I now have seen over the years that a lot of new traders seem to be drawn towards it. I think it's not about the system. I think it has a lot to do with how the charts are looking. When you see that the price is already in the top right corner of your screen, then you don't believe that there's a lot more to go, and you see all the free space that is at the bottom. That's how I always felt looking back now, that this might also be related to that, because I was never comfortable with the trend following in the beginning, but it has shifted over the years as well.
Never thought about that. That's a good point. I never thought about that. That does visually, you're right. When you see it there's no space here, lots of space down there.
And then
Yeah.
people believe it has gone so far, it has to turn around. But I think that's a very important belief that you need to work on.
Mhm.
And then the more you see it, then you realize, okay, price can keep going actually for quite a long time. It's actually the biggest thing I think we see in Edgewonk, that traders get out of their profitable trades too early. I think it's, besides jumping into FOMO trades, I think that's the number two, a close second. People jumping out of profitable trades way too early, and they leave so much on the table. Did you struggle with that as well?
Yeah, a lot. And again, this is when I was younger, less mature, less educated on the market. Didn't really worry about data collection and back testing and trust and all that stuff. Yeah, for me, and this is one of the dumb terms I always hear. It's like you can't go broke taking profit. So I would justify it doing like that, where it's like, oh, I'm only halfway to my projected profit target, but I'm going to get out because it's a profitable trade. And like, that's all that matters. And, back then I didn't understand risk reward and risk ratio and all that fun stuff, and how like, hey, my wins need to be full so they make up for my losses. It was just like any type of winning trade is good. Like higher win percentage, I'm awesome. I remember working with a guy, his whole goal was to have a 90% win percentage. And I kept trying to tell him like, hey, like that's a cool goal, like, but like it doesn't, why? Like, dude, does it really matter? He's like, I just want to get it. I want to get it. I want to get it. Okay. So I only worked with him for probably like a month or so. And then, you know, our philosophies didn't kind of mesh. But I remember getting an email from him like a couple months later. He's like, Akil, I don't know if you remember me, but I finally did it. I had mine like a 95% month. I'm like, dude, that's awesome. Blah, 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 blah. I'm like, you know, what was the return on investment like? He was like, I lost money. And I'm like, what? And the dude was he would take profit every time he was like 2 pips in the green, but then he would take full losses. So like he only had like 2 losing trades all month, but like those 2 losing trades wiped out all of his profits because he never like let them go to where they were supposed to be. But he was happy with his 95% win percentage, which makes 0 sense, but it's tough. But I think being educated, being knowledgeable, understanding how the full picture works. And again, that goes back to your back testing. When you have your data, you can see your average wins and how they make up for losses and how the whole pie works together. You start to understand more where it's like, hey, like I have to let this ride. Like I chose this level for a reason. Trust myself, trust my analysis. Just get away from my charts, don't look at it, and you know, I need to follow the rules of this plan to be successful.
Right, totally.
Talking about trading personality, are you more of a risk reward or win rate guy?
Ooh, more of a risk reward, win rate to a certain level. Um, it's funny. A couple years ago, I don't want to say invented this strategy, but I had this strategy using like Keltner channels and stuff like that. Um, and it was a really profitable strategy. The problem was it only won about 30% of the time. And knowing myself over the years, like my threshold is probably about 40%. If I'm 40% win rate, like I'm fine. Obviously, anything above that is great. But under 40% is where I get kind of like fidgety. And I'm telling myself, Akil, you know, that was like many years ago. Like, you know, the game more now. This is going to be a little bit different. So I started trading a strategy that had 30% win rate. And this thing would routinely take like 10 to 12 trade losing streaks in a row. But I'm telling myself like, okay, you know, like you got this, you know how trading works, you'll handle it. You're a different person now. And even then it was still uncomfortable. Like the psychological battle of like coming in every day and like losing like 12 times in a row and then having like 2 wins and then like losing again like 12 times. Like it tore me apart. Like I didn't make any mistakes, but I can feel myself like wanting to ignore signals and or do dumb stuff just to get the wins going again. And so I ended up ditching it just because it didn't. I knew I was going to get myself in trouble. Um, so definitely win percentage matters. But for me, it's you know, I would say 40% is probably my floor. Anything under 40% is I probably would start getting a little fidgety and that would open up the door to some mistakes. But me personally, I'm like 55%, 55, 60 max. Like I don't need a 70%, 80% win percentage. I'm fine if I can win a little bit more than I lose mentally.
When
Yeah,
you
same for me, 50%.
Yeah, yep. It's with 50% with a good risk reward, that'll get the job done. It cuts down the pressure too, because now it's like my expectation isn't like I have to come in and win every trade. It's like, hey, I'll win a few, I'll lose a few, and like I'm very comfortable knowing that I can win half the time and make money. Like it's a very comfortable place to be in for me personally.
Yes, I
when
agree.
you see that your strategy is underperforming, is there something like you track market data? Do you think your strategy is maybe out of alignment? The market is different. Is there any way how you assess your strategy during a losing streak?
Yeah, so I'm always journaling. I'm always reviewing trades. I think that's something that a lot of traders don't do enough is reviewing trades. I'm reviewing them to see if I did everything right. I'm also reviewing them to see like what could I have done better. So I like reviewing like the perfect trade, meaning like in hindsight, looking back and saying this is what I did. Is there any way I could have gotten here earlier or got out sooner? Just kind of to see if there's any clues in there. And in that review process, I start to learn a lot about the tendencies in the market because the market conditions do change as you mentioned it. And sometimes, but not sometimes, your strategy will perform differently. For me, a lot of it doesn't necessarily come with the entry technique or the actual trade. It's more so like the profit target or the stop loss. So I've noticed that in low volatility times, I think one of the last ones that I had that was bad was like 2000, I want to say 16 or 14, where like the volatility was sucked out of the market and my performance numbers weren't as good as I thought they should be. But my win percentage was about the same. And so it didn't really make sense. And what I noticed is that, especially with my secondary targets, right, price action just wasn't moving enough to hit them. So the location was good, the entry was good. It just wasn't getting to the level that I thought. And I was able to catch that by reviewing it and just journaling on a consistent basis, make some changes about halfway through the year and end up surviving the year. It wasn't my best year in the world, but I stopped it from being a negative year. So I think that consistent review process is key because markets are different. They will change. And I'm not saying you need to make a complete overhaul of your strategy. You don't want to ditch it, but you should be willing, in my opinion, to make small tweaks to adjust with the times if you need to.
Totally. Yeah, just this week we actually introduced in Edgewonk a new metric showing you how many times the price is hitting your stop loss and how many times it's hitting your target. Because that's, I think, I see it often when I review the journals that they are too aggressive or too aggressive with their targets. They set it too far. Price moves in their favor quite a bit, but because they're shooting for so wide targets, price doesn't make it there. So looking at your target placement and how price is moving into your targets is, I think, really, really can be really helpful. Because the entry, there's only so much you can do before you get into FOMO or missing trades. But the take profit and the stop loss, I think there's a lot of room for tweaking.
I agree. It's funny you mentioned that because I agree 100%. I think that I don't want to say most traders because there's a lot of most traders that I work with and probably a lot of traders that you work with, the entry isn't the issue. It's just like you're making the right prediction, you're calling it in the right place. You're just shooting for too much of targets. And like for me, there's nothing worse than the market doing everything you thought it was going to do, but like not going to where you thought it would be. So, but I think too many people spend time worrying about the magic entry, how do I get in? How do I get in? And I don't want to say it's irrelevant, but like there's so many, there's different ways to do it. There's only so many ways to do it. Like I think the prediction of where you think that move is going to happen and then where you think it's going to go to, I think that's much more important than just like the entry.
Right. Yeah, it's such a big mindset shift if you can get away from this entry-focused trading and look at your strategy as a whole with a lot of different moving parts instead of only at the entry.
Talking about that, what is your take on setting take profits versus simply letting the market take you out of your trade when you're trading your stop until infinity?
So I think it depends on your trading style. I think it depends on the market as well. So I was just having a conversation with a trader yesterday who, you know, let's say you're investing in an index, let's say like the S&P, where the S&P, the FTSE, something like that, like we're the DAX even, right? We're at all-time highs right now. If you're in like an index where they traditionally kind of go higher, that's just what they do. I don't think it's a bad strategy to kind of put a position in, obviously, if you're going with the trend, and then letting it ride, trailing stops and trying to get as much as you can out of it, kind of like an old school trend continuation way. On the other hand, you can also get into a lot of trouble doing that because like we just mentioned, if you're trailing stops, you're going to get stopped out when the market goes against you. So at some point, you're going to reach a profit level that's higher than what you end up taking. And it may be more efficient to try to project where that high is going to be at, or where where the highest point of profit is going to be at, and getting out there or close to, never get up to very high, but close to, instead of waiting for the market to come all the way back down and take you out. But again, I think it depends on what type of market you're in. If you are a trend trader in a heavily trending market, then yes, it's much safer to kind of do something like that. If you are a counter trend trader in a market that is consolidating, you probably don't want to let it ride. Me personally, what I do in situations like that, where I think there's kind of this extended move, I do a combination of both, right? I'll split my position up into 2 or 3 or something like that. And I'll always have a take profit at a level where I think price is likely to go. I call it my scaredy cat level, where it's like I'm not super aggressive of targets. It's like I want a nice target level where I think price action will go. I want to get some money. I want to put it in my pocket, move my stops to break even, and I know it's a freebie trade. With the second half of that position, though, now that I've already made money off the trade, that's where I could be more aggressive, where I can say, hey, I'm going to let the second half of this position ride until the trend takes me out. So I do like doing a combination of both. Mentally, it's much better for me because at least in the back of my mind, I know that, hey, at least I made something out of the trade and I don't have to worry about kind of getting stopped out for break even or less than what I desired if it were to retrace.
You have been working with traders for so long. And by the way, the links to your program, your Twitter, everything will be in the video description and the podcast. The traders who come out of your program with the best results and the biggest progress, do they have something in common? Is there something that you see among them just for how they approach trading, the way they're thinking?
Yeah. So the ones that are the most successful are usually the most annoying. And I mean that in the most respectful way possible.
I know what you mean, yes.
I was annoying to my mentor, Jason Greystone. When I taught him, he was annoying to me. And it's like, these are the ones that are always asking questions. They're always emailing you. They're always sending you messages on the chat. And it could be like about the smallest, simplest things. There's one guy I'm working with now who like, it seems like he's asking me the same question every day. And it's like, I told him like, it's annoying, but don't stop. Because to me, it just means like he's double checking, triple checking, and he's doing his work. You tend to see those people have the most success because they're just putting in the most effort. I also see a lot of success from people who are, well, obviously the most disciplined traders. So a lot of sports people, a lot of ex-military people, anyone that is just like very, very strict and disciplined. I see a lot of success from them because they just don't fall into those psychological battles. So I would say that, yeah, the ones that ask, and honestly just put in the work, they do all the small things, they pay attention to the details. I tend to see those have the most success. The ones that are kind of like, they're doing it, but not fully doing it, they kind of stay in that like break even bubble forever until they kind of, figure out that, hey, trading isn't for me and they quit, or they understand like, hey, if I want to actually be successful, like I've got to start doing all of these small things.
Yeah. We interviewed Dr. Steenbarger a while ago, and he said the number one trait that he sees in the best traders that he's working with is curiosity. And I had to think about just what you said. It's just asking and just being curious to just don't be afraid to ask. I know, especially when you're in a group setting, it can sometimes be intimidating, but asking question, I think, is so important whenever something comes up because it can lead you to a new place, give you new impulses. I think that's so important.
Yeah, I think curiosity is key at 100%. I love, I still spend time, even after 18 years of doing this, like just going on random charts, like loading up random indicators, just like looking around. And I call it like playing in the sandbox where I'm like, ooh, what is that? I don't use that. That looks cool. And just like, I love the back testing process of like trying new things again, especially with indicators, since I'm newer into indicators, or well, I started with indicators, just like most traders, just throwing like a bunch on my chart and thinking they would work. And then kind of coming back to them and seeing like, hey, what happens if I tweak this setting or do this? And just like, it's fun. And most of the stuff doesn't work, but every once in a while you find one thing and it's like, huh, like that could be helpful. And like you said before, with razor thin edges in the market, if you can find one thing that just like increases it by a little bit, like that's a massive win. So yeah, staying curious is key. Don't get too locked in.
That's also one of my favorite times on the weekend when I dig into my Edgewonk and review the week, because especially after a month or after a quarter, you can sometimes find these golden nuggets, like you repeat a mistake 2 or 3 times that quarter, which doesn't sound like a lot when you take 50, 60 trades in a quarter, but then you see how much those mistakes cost you, and then you add it up over the year. There might be like 12, 15% or so at the end of the year. When you're making 40, 50% a year, that's that's a massive increase in your baseline. And digging for those gold nuggets in Edgewonk is just, this is my sandbox, right? It's always amazing. Curiosity. Yeah.
And the data's all there. We have, if you're doing it, the data's all there. It's like, I don't want to say it amazes me that more traders don't take advantage of stuff like that, but we know that a lot of people are lazy and they're just like, I don't want to track it. I don't want to dig into it and look at it. But that's where the nuggets are, man. I agree 100%. That's so true.
I want to ask you a question because I think you're the perfect person to ask this. Because you have a family, you have a very busy life. I see you are into athletics and sports. People who have limited time, they have a day job maybe still, and they want to get into trading. What are some tips that you can give them to use that time that they have in the best possible way?
Schedule it out. Start by taking, all 24 hours of the day and schedule it out. So start off with the things that you have to do. So like you have to sleep. So fill in your sleep time. You have to go to your day job. So fill in that time. Maybe you put in like, hey, I have to spend at least 2 hours with the wife and kids, the family, put in that time. And then see what's left. See what time is available to work on your trading. And then make adjustments. So, for example, it's if you can go to bed 1 hour later, or if you can wake up 1 hour earlier, you just opened up 1 extra hour of time. I remember talking to a guy a while ago. I call him the Xbox guy. We're asking the same question. He's like, "Hey, I have a day job. I don't have a lot of. I want to learn how to trade, but I don't have enough time." And I'm like, "Hey, okay, walk me through your schedule." And he's walking me through his schedule, and he's like, "Yeah, I spend about 3-4 hours a day playing video games." And I'm like, cool. Like, I used to love games. I used to be a gamer. Trading and kids both kind of crushed that, although my kids are getting older, so maybe I can get back into it, but I'm afraid they'll embarrass me. But I told him, I said, hey, like those 3-4 hours of Xbox time you have each day, like take that away. That could be your trading time, or take half of it away. And unfortunately, he was like, nah, I'm not willing to give that up, which tells you your priorities. But you can always find time in a day. So I think schedule out your day, find those little pockets that can give you time of, when can you work on your trading? And if you're at the point where you are trading, it's going to help tell you what type of trader you can be. Like if you don't have a good pocket of time, you can't be a day trader because you need to be in front of your charts. Maybe you're a swing trader. If you're on a 4-hour chart and you see that, hey, I have a time block every 4 hours where I can take a break and look at the charts, maybe that's the better style for you. But I think it's important to remember that, especially in the beginning, you always want to work your trading around your life, right? Your real life is what matters most. That's what pays the bills, right? So work your trading around around your life. And then if you're fortunate enough, then you can kind of start changing your life as your trading gets better and kind of doing the opposite.
Right. And I've seen it's not always the right answer to become a full-time trader. We worked with a trader, I don't know, 7 years ago.
Mhm.
He had very good results, but he had a day job. Then he quit his day job to become full-time profitable trader. And he immediately started becoming a losing trader. And I talked to him, he said he was also missing the social interactions and he didn't feel like sitting at home all day. Then he made the adjustment to work half-time and trade the other half of the day at home. And that was such a massive improvement for him because he also felt better. So I think it's really important that you find out who you are. People put this on a pedestal to say, I want to sit at home all day by myself and just click the mouse. I don't think it's the right answer for everyone. There are people who are social and people who maybe don't even know that they're social, and it's not the right approach for them.
Yeah, I agree. It's and I'm not the most social person in the world, but it's like, yeah, I couldn't imagine. So I coach track and field still. I started doing that about the same time I started trading. And I always get asked the question where it's like, why do you do that? And it's not, track and field coaches don't get any money, but it's like what it does is it takes me out of the house for 3-4 hours a day, gets me around people in an athletic setting where I'm more likely to kind of work out or do something to stay in shape. And it gives me that time away, that relief, time to clear the mind. And what I found in my trading, especially in comparison to when I first started and I was doing like 12 hours a day and just getting like mind melted, is that when I come back to the charts, like I'm more inspired. Like it's because, it's like your partner going away and then like they come back and you're like, oh man, like I'm excited to see you again. It's one of those type of deals. And I feel like it's a new spark when I look at the charts or do anything trading related because I had that time away. When you go through those sessions like a back testing session where you're in the charts for like multiple hours, it kind of gets bland and boring and like you can kind of get on autopilot and just like you said, you need that break. We all need a break as human beings.
And I think it also shows you why or how trading can benefit your life when you have those chunks of time where you can just in the middle of the day do something that you absolutely love.
Mhm.
And I think then you start to appreciate it much more.
Agreed.
What advice would you give someone who's coming to you, new, interested in trading, maybe has a little bit of experience, how to make the most or how to make the biggest progress, and where should they start?
So coming to like our program specifically, or just like in general?
You or yeah.
Um, I would always say, no matter where you're at, start with the basics. I believe that the advance is nothing more than a mastery of the basics. Even myself in my trading career, I went back to like learning the simple stuff like candlestick patterns and simple patterns, like a lot of stuff that you guys talk about in your book. And I found that once I went back and really mastered those small things, the things that seem insignificant to like the bigger strategy, I became better at my analysis because now I can see different clues that the market is giving. Because I think, especially if you're doing technical trading, the market gives a lot of clues. It's just hidden between like a bunch of junk. So the better knowledge you have at seeing those clues, the better chance you have of kind of creating your edge. So I would say start at the beginning, even if it's a review it. There's nothing wrong with that. And then work up and see how you can use those small basic things in your bigger trading. But in general, I kind of say this. I say learn everything the first time, but just to experience it. So understand this, understand different strategies, see mechanical strategies, price action strategies, Fibonacci-based patterns, moving average, like experience it all and try to get a feel of what you think works well with you. Like, oh man, like this trend continuation thing using the moving average, like I really like that felt good. Like I picked it up pretty quickly. Or, oh, this strategy over here, that was confusing. I don't quite understand it. And then you can kind of start separating and kind of figuring out, hey, I like this. This was easy to understand. This didn't make sense. And you can kind of lock in on what type of trader you think you're going to become. Then do everything again, right? But now when you learn the stuff, learn it in reference to kind of the strategy that you plan on approaching. So instead of just learning like, hey, this is a moving average and it does this and does that, learn it, but kind of in the mindset of, okay, I'm learning moving averages. How does this directly relate to this moving average based strategy? Or I'm learning candlestick formations. How does this pin bar directly relate to entries? And then you kind of like have a different appreciation for the beginner knowledge in respect to the strategy that you're trading. And then after that, after you kind of locked in on a strategy, go through the back testing process. I always say do kind of 2 rounds of back testing. There's a pre-back testing. This is just like you have an idea, you're looking through the market. You're not really taking too much detailed notes, but you're looking for different ideas like, hey, stop loss ideas, different type of entry filters, exit filters like that. And then once you kind of have in your notes everything you want to test, lock in, test it. If it works well after all the adjustments and everything, go through some demo trading experiences. That way you can make sure you can actually trade it live, because sometimes you can do things in back testing that you can't actually execute in the live markets. And then start small, start with a little bit of money. And as you progress and set some goals, whatever it may be, allow yourself to trade more and more capital as you have time to kind of iron out those mistakes.
Love it.
Talking about that, what is your approach to scaling up capital once you are profitable? I mean, how would you approach it? Maybe with prop firms, adding your own capital. Would you increase your risk per trade? How would you approach that?
So from a personal capital perspective, I would start small. So if you have, let's just say a $10,000 account, maybe start with trading a quarter of it and say that for the first 3 months, 6 months, depending on your style. If you're a day trader, maybe a little bit smaller than that. But for the first X amount of months, I'm only going to trade a quarter of my available capital, because we have to understand that at the beginning of our trading, especially our live trading, that's probably when we're going to be at our worst. Like we're most likely to do the dumb stuff in the beginning and mess up. So it's like, why mess up when you have the most amount of capital available to mess up with, right? Mess up when you have like a little bit of money. And then whatever that time frame is for you. And I always like judging it off of not just profitability, but good trades. Because you could be profitable taking bad trades. We all know that. You can just get lucky in the market. It happens. But base it off of a good trade percentage. meaning trades that you followed your rules, and then also base it off kind of profitability. And once you've achieved whatever that goal is after the blank amount of months period, then maybe add another quarter of your capital. So now instead of trading, what, 2,500, maybe you're trading 5,000, and then do that for another blank amount of months, and then work your way up to your full allotment. So I think that's the best way to scale up if you're just talking about personal capital. As far as prop firms goes, I would have loved if I knew about prop firms, online prop firms, when I first started trading. I went into managing money because I didn't have enough money to trade just with my own capital. Once I kind of realized that I wasn't going to turn, $10,000 into $1 million in a year, I was like, okay, well, I got to do something else. So I did the old school route of like going to people and giving presentations and begging them to like give me money to trade, and it was a horrible experience, but it's fun. It hardened me, I guess you can say. But I like the prop firm idea. The goal is to build a bigger account, right? So we can use the power of compounding. How you build that bigger account is up to you. You can trade your own capital. You can work for a prop firm, do a challenge, win the challenge, and then get paid off the prop firm capital. And then that capital gets, or your profits from that, get put back into your personal account. You can even do stuff where you write out a plan where it's like, hey, I'm on a 5-year plan. I'm going to pick up a part-time job, and the money I make from this part-time job is simply to go right back into my trading account. Because again, the goal is to grow that account. Our our return on investment probably isn't going to change too much. Like, I don't think you're going to go from like a 10% trader to 1,000% return on investment. But let's say you're locked in at like a 50% return a year. Well, the question is, how do you grow that? Well, 50% return a year with $1,000 is like no big deal. And people are like, that stinks. I only made what did I say, $500. But think about the future. If you can get a 50% return with $1,000, you can get a 50% return with $10,000, with $20,000, with $30,000, and then that profit is much bigger. So the goal is to grow that trading account. And I was gonna say by any means necessary, but I don't want people going out there like robbing and killing people for money. But like, just ruin your podcast. This trader says kill for money. But aside from murder and stealing, try to grow that capital by any means. And I think prop firms are a great way that you can use a skill to supplement your trading income. It's brilliant. It gives hope to traders that don't have a lot of capital but are really, really good. And there are a lot of people out there like that who are really, really, really good. They just don't have a lot of money to trade with.
Agree, yeah. I mean, I always say, just because, for example, there are some people that have a nice chunk of savings, say 50,000 US or so, then just because you have that kind of money doesn't mean that you should immediately risk $500 per trader. So that's obviously insane. What I always tell my students is, it should hurt a little bit when you lose, but when you win, it should also feel a little bit good, So for me, that amount in the beginning was like $50, because losing $50 as a student really sucked. But if you make $100, like a 2-to-1, then fantastic, And then you can pay yourself sometimes, take your girlfriend out to dinner, etc. And then you think, oh, okay, my friend, he has to work how many hours? 10 hours in the library in the university to make $100. Oh, fantastic! I just made that on one trade, and that motivates you, right? You don't have to shoot for the moon immediately. That will come with time, right?
Yep. Yeah. Yep.
So I want to be mindful of your time. I think we covered a lot of ground. I think this was a masterclass in strategy development and building a strategy and getting to the next level. So thank you so much for taking the time today to talk to us once again. Everything will be in the show notes about you if people want to connect. I love your content. I've been following you for, I think, over 10 years. It's been a while, but yeah, thank you for being here with us today.
Yes, appreciate you guys having me. Always love what you guys do. You guys are geniuses in the trading community, man. I think everyone should look into what you guys are doing if they haven't already.
Thank you. Appreciate it.
Thank you.